market report. We're going to look at SPY first. Let's go back to a weekly chart, take a look at a couple of things, and then we will go back to that daily chart. We can see that our run has been quite linear since about 2011. And we can see the move. We've only had a couple of touches, a few touches of the 50, and we've been meandering around the 20 for quite some time. So here, from a weekly perspective, we are showing a little bit of support inside body candles. We'll see where it ends today. We've got the ECB releasing information and all kinds of things that could drive us in one direction or another. Suffice to say, 200 is really the line in the sand for us to end the week on, with a little bit more aggressive weekend for a bearish slant at 201, with support coming down into 195. Now, we do see quite a bit of negative divergence. Remember, negative divergence cannot be ignored. And so, although we have things drifting to the south quite a bit, the overall slant is still upward, and so that southward pullback just means it's coming into support. There's no collapse there. There's nothing that shows any kind of major instability from that perspective. And so as we come into the daily chart, we see that things are pretty jagged, but also showing support. We're caught between the 50 and the 200. That gives us a bit of a ping pong event, but we are continuing to make lower highs and just meandering around here in this space. What do I anticipate? More meandering. There are a lot of things that need to happen here, and working off some of the energy that's been sitting here is really what the chart needs. And so I actually have been harping on this sideways action for quite some time. If you go back to my YouTube videos, you'll see that there really are. That's been the mantra for a bit, and it still is staying like that. I expect it to maybe choke around like that until, maybe February or March. We're pretty fortunate to see ourselves bouncing off of a support level. Congestion here at 204.47 or so. Here's the thing: if you are holding something that follows the general market trend as opposed to being its own little mover, doing whatever it is that it does, you need to pay attention to the fact that we've got a lot of sideways action. So if you're looking at an option, erosion for time and time decay is something that you really need to think about. So moving from SPY, we're going to go to the IWM. That's pretty messy. Let's get this clean. All right, we can see that we're in a bit of a channel, as it were, right here, and it's been a channel for a while, sitting at the midline of that channel. Could it bounce? Yes, it should bounce into resistance and then continue forward. Notice that the location of the IWM in its channel is quite different to SPY. SPY is coming off the bottom of its channel, and if we did something like tighten up this move, we could say the same thing for the IWM, but the range is quite a bit larger, and so it's really in the middle of everything. It also is caught between the 50 and the 200. Look at the ping pong event. We're almost building a little bit of a box here with all the ranges touching, but we'll see how this looks over time. Let's go back to a weekly, see what we can see. Same sort of thing, sitting at the 50. The 50 and the 200 are really far apart here, but the 50 and the 20 are very, very close. Again, not the same type of formation we're seeing in SPY, so there's quite a bit of support sitting at the IWM there. Should be very choppy. Momentum is still drifting negative. It's probably a little bit more negative than SPY, but in the end, a very unresolved state. When you see an unresolved state, the best thing for you to consider is typically the iron condor. And so We certainly are looking at those sorts of things with the edges sitting on the outsides of these levels. You know, if you're looking for directional motion, it's hard to find. And for those of us that are newer in the market, that somehow come to this notion that we must be invested all the time because what if we miss something? That's coming directly from an investment house that wants you to keep your money there all the time. Okay, and those are the guys with the biggest voices. They're the ones that are always talking. But the fact of the matter is there are some spaces where you just should sit out if you're not looking to capture time premium or time decay. It's a space that you just need to sit back and wait until something happens and confirms that it's got price action out. Put your money someplace else. It's just going to be sitting still over time here. Or, you know, you look for a very good dividend bearing stock that can actually hold its dividend no matter what it is that it's doing. That's really going to be your best bet from that perspective, but that's, of course, my 2 cents. Let's take a look at the Qs finally. Qs, looking a little bit, I did this, I don't even know what day I did that. So this is showing us this pullback right into this space, sitting at support, a lot like the others, still upside momentum. Notice the length of this wave, the length of this wave, and the length of this wave, right? They are really contracting. We have the 1, the 2, the 3. So we've got that contracting base. Should we pop up into a lower high and chop around? Yes, I get the same sort of thing from everything that I'm looking. We've got some negative trending there, a little bit of negative divergence, not a ton, but it absolutely does exist. This box was not filled at the time that I first drew it. Now we can see that it's a place that we are definitely revisiting over and over and over again. This is an S-curve test for those of us that study together. It's sloppy S-curve test, but still making these lower highs. A lot of the forms looking the same. Momentum is negative, and so we expect it to bounce into resistance and not catapult outward, just sort of move a little sideways. Here's the story. Whenever you see something like that and a chart accelerates to the north, to be sure it is going to come back. Do not buy the breakouts. Of course, that's something else I've been harping. Don't buy the breakouts. Don't buy the breakdowns. This is not a trending market. Simple as that. So we'll see. We'll watch. Got the same old story. Hopefully next week it'll change. But good luck trading. Choose wisely. And if you can't see a clear path, don't go at all. Have a good day.